All right, just a recap. So we're going to go into an agenda and we'll be covering some housekeepings, just a little introduction about who I am, and then we'll dive into tax saving tip number 3 and 4. Then there'll be a time for Q&A at the end of each tax saving, and stick around until the end of the webinar where there's a free gift. We know how we love gifts, so please do stick around. Dante, you still have your hand up. You can just unmute. Okay. All right. You can just unmute. Okay, cool. The hand is down. Okay. So the workshop / webinar will be recorded and the slides deck will be provided upon your request. So you can just send us an email at info@consulting.co.za requesting the recordings as well as the slide desk. So please do reach out to us. So at the end of each tax savings tip, there'll be an opportunity to ask questions. So please do ask, but I'm not a fussy person. You can just raise a hand if there's a question that you want to ask. All right. So a little bit about myself. So I'm Pamela Nzumo from Nzumo Consulting. We're an accounting firm where we provide tax, bookkeeping, payroll services, and advisory services to small businesses. I consider myself to be a risk taker and a problem solver. So I'm a SAICA registered accountant as well as a SARS registered tax practitioner. And one of the things that we pride ourselves about at Nzumo Consulting is we help SMEs pay little to no taxes legally, of course. So I'm a mom of 4, so my house is quite busy. My why did I start the accounting firm? It was to help small businesses in this area of running any organization when it comes to the finances side of the business. Because a lot of small businesses are experts at what they do. That's what they do, they're great at. But they often need assistance when it comes to the finances side of the business. And that's where we come in. We're saying we're here to help small businesses. So what I hope for you from this workshop / webinar. What I always say to small businesses is, I don't think what I'm about to say is new, right? But I'm hoping that you implement just one thing that you get from this webinar. Implement it, because it's one thing to gather as much information, but if you don't then use it into your business to help you pay less taxes, then what I'm trying to achieve would have been pointless. So all I can ask for is if you can just take just one thing from today's webinar and implement it into your business, then my job would have been done. Okay. All right, cool. So a lot of small businesses don't like paying taxes, right? But I'm here to share the light in terms of saying that there's a lot of tax savings tips, tax savings cuts, tax savings incentives that are available to small businesses. But it's all about knowing about them and ensuring that in your business, you are making use of those tax savings breaks, those tax savings incentives. So last week, we covered a tax savings that's called the Small Business Corporation, as well as the Employment Tax Incentive. If you were not able to join our webinar last week, please just send us an email and ask for the recording for last week's session. Today, we'll be covering how you can pay less tax when it comes to saving on penalties, as well as a mandatory grant that is available if you are paying SDL. Next week, which is the 14th of December, we'll be covering the big one, VAT. How can you reduce your VAT bill to SARS? That's what we'll be covering next week. So please do join us. And we will share a link of how you can register for next week's webinar. Okay, so without further ado, it's 9:10. Let's talk about the tax savings tip number 3, which is regards to penalties. So how do penalties come about? As we all know, if you are if your company is registered for VAT, as an example, and you submit your VAT bill late. Another example, if your company is registered for pay-as-you-earn, so meaning that you have employees in your company that you submit pay-as-you-earn to SARS by the 7th of the following month. If you submit that pay-as-you-earn return late and you pay the pay-as-you-earn late to SARS, you automatically incur a 10% penalty. Okay, so here's an example. So let's say your pay-as-you-earn for the month of November was 50,000. So pay-as-you-earn for the month of November has to be submitted to SARS by the 7th of December. So SARS gives you 7 days to pay that money over to them. If you submit that pay-as-you-earn to SARS late, you automatically incur a 10% penalty. If you submit that pay-as-you-earn on time, which is before the 7th, you submit it on time, but you pay it to SARS late, you automatically incur a 10% penalty. If the 7th, I have to stress this, if the 7th falls on a Saturday or on a public holiday, then it gets moved up to the last working day before the 7th. So if the 7th falls on a Saturday, which means you should submit and pay the pay-as-you-earn UIF SDL to SARS by the 6th, which is the last working day. If you submit it late or pay it late, you incur a 10% penalty. Here's an example. If your employee's tax was 50,000 and you either submitted late or you paid late, you incur a 10% penalty, which would amount to 5,000. So now it means that your pay-as-you-earn bill has now increased by 5,000. If you had submitted on time and paid on time, you would not have incurred this additional expense. Okay. So I'm just going to share a screen on another example of a statement of accounts that I normally make an example of. Okay. You should be seeing a PDF document. If you can see it, please raise your hand so I know that you guys are with me. You can see what I'm seeing as well. Thumbs up. Are we still together? All right. Thank you so much. Thanks, guys. Okay. So what I've got in front of you now is a VAT statement of account. Okay. So this is just an example to stress how important it is to A, submit your returns on time, and B, pay them on time. So this company submits VAT every 2 months. So VAT is normally paid by the 25th of the following month when you are supposed to, it has to be submitted by the 25th of the following month when you're supposed to pay, when it's due, and then at month end you have to pay the VAT payable. Okay, let me say that again. VAT for most companies is submitted every 2 months. Okay, so by the 25th of the following month, you must submit the VAT. By the end of the month, you must pay the VAT. I need us to understand that these are 2 separate instances. There is the submission and then there's the payment. So the submission is sort of giving an invoice to SARS, just putting it as light as possible, sort of giving an invoice, and then you now have to make a payment. So these are 2 separate instances. So if your company is liable to submit VAT every 2 months, the 25th, you must have submitted the VAT, and by the end of the month, you must have paid the VAT. Let's go into an example. This company submits VAT every 2 months. So they submit on even periods, meaning that they submit not January, they submit February. Then not March, then they submit April, in that way. Okay. So This company submitted their return on the 25th of May. They submitted on time, right? On the 25th of May, they submitted their return to SARS, which was 194,125.11. So they submitted on time. So what I had indicated is that you must submit by the 25th and you must pay by the end of the month of that particular month. So in this instance, by the 30th of May, they should have made a payment to SARS. However, this company only made a payment. You see, there's the payment. They only made it on the 1st of the following month. And because of that, they incurred an automatic penalty at 10%. So the return was 194,000 because they submitted on time, which is great, but because they paid late, they automatically incurred a 19,000 Rand 304 penalty. So now they had to make additional payment. So if you see here, there's an additional payment that they now had to make because they now incurred this additional penalty. Okay. Another example. The following VAT period, they submitted late. So returns have to be submitted by the 25th. So they should have submitted this return on the 25th of July. They submitted it on the 30th of July. Because they submitted late, they automatically incurred a penalty at 10%, which came up to 24,000. So now they made payment towards the return amount, but because they submitted late, they also had to make an additional payment towards the penalty. So how could they have avoided having to make this additional payment? By submitting on time. So do you see what I mean when I say what's causing small businesses to pay even more taxes is that they are submitting their returns late and automatically incurring this penalty. So then they learned their lesson, thankfully. On the third VAT submission period, they submitted the return by the 25th. They paid by the end of the month, and therefore no penalties were incurred. Does this make sense? Okay, cool. I'm going to stop sharing and give you guys an opportunity to ask questions. I see hands have been raised. No, Uzola, please go ahead. Please unmute. Nobzolo, you can unmute and ask a question. Okay, cool. You can just unmute when you're ready. We're just gonna run to Bonolo.
Yes, Bonolo. Okay, so thank you for the webinar once again. I just wanted to find out, so after you submit the return, how many days do you have to then make the payment?
It's roughly 5 days. It's 5 days later.
Okay, all right, thank you.
You're welcome.
Hi, Pam.
Hi, dear. How are you?
I'm well, thanks. And how are you?
I'm great, thanks.
Yes. I'm not sure. I always thought, and I think now I've been so wrong the whole time. I always thought VAT returns and VAT payments are submitted before the last day of the month. Because I remember, I'm telling you, because I remember SARS used to say, if you're submitting manually, like, if you're going to the branch to submit, then your due date is the 25th of the month. But if you're submitting on e-filing, the submission date is the last business date. But I have noticed that, let's say you submit on the 31st, you'll see on the statement of account, there'll be a penalty. And I always wondered
why.
So it's like SARS says one thing, they do the other. Because even if you go to their website, they'll say VAT returns are submitted before the 25th. But on e-file, you submit before the last business day.
Mm.
But for every submission you do after the 25th, there's always a penalty. And I always wondered. So I thank you so much for bringing that to my attention. Thank you so much.
You're welcome, dear. You're welcome.
Yes. Thanks.
Okay, any more questions? I have time for just one more, and then we move on.
On your slide, I saw some percentages of interest.
Yes.
Can you go back to it and just elaborate on that?
All right. This is not what I wanted to cover today, but we can.
No, it's fine. It's okay.
It's fine.
It's okay.
I can touch on it. No, I can touch on it. It's okay. I can touch on it. So, okay. So let's say you submit your return late, right? The first, or you make payment late. There's a 10% penalty that's once off, right? You incur this 10% penalty, which is once off. However, if there's also another penalty, well, interest that gets charged, but it gets charged on a monthly basis and is calculated daily. So let's take this example. This person was supposed to, this person incurred interest. Can you see that at 7.7?
Can you share the screen?
Oh, I'm not sharing. Oh,
no.
My apologies. Thank you. There I am pointing away. Okay, here's an example of what you're asking with regards to the interest. So when you submit or make payments late, there's part one, penalty, 10%. It's once off. You only incur that penalty once off. But then there's the second leg, which is the interest. Interest gets calculated on a monthly basis. And that's what is showing on this statement of accounts. It's calculated daily, but it's showing on the statement of accounts on a monthly basis. So it gets added up to say over the month, this is how much interest you're gonna be charged. The interest is determined by SARS, but what happened here is this person submitted the return on the 30th of July, which was late, right? And they only made payment on the 30th of September. So they incurred interest for August as well as interest for September. So every month you don't pay, you are incurring interest. Every month you are incurring interest until you finally pay. The penalty is once off, 10%, it's once off, but interest gets charged on a monthly basis until you pay. So how do you avoid those interests? Pay on time. How do you pay on time? This is an example of VAT. So but we're going to touch on VAT next week. But in summary, when you charge a client VAT and they pay you money, put that VAT money aside. That's the only, because you're just holding that money for SARS. It's not your money. Put that money aside so that when VAT period comes, you have money that you pay over to SARS. Because if you don't pay it on time, you are going to incur this one penalty. Secondly, the interest. Okay, I've got 5 minutes, so I'm not gonna spend much time on that one. All right, cool. Let me quickly. Okay, let's quickly run to the next. Okay, we've covered the question.